Hey guys, Barry Page here with another rule of IBC. Today's video is about don't be afraid to capitalize. In his best-selling book, Becoming Your Own Banker, Nelson Nash explains and discusses the rules for IBC. But you really had to see him live or at least hear a seminar to hear him really discuss the rules for IBC. So don't be afraid to capitalize. What exactly does that mean?
Okay, don't be afraid to capitalize. Why are people afraid? One of my favorite authors, Zig Ziglar, said, "Fear is false evidence appearing real." Let's look at the definitions of capitalize and capitalization. Capitalize is a verb, to convert into capital, to capitalize the company's reserve fund, to treat it as amortizable investment in long-term capital assets. That's from Merriam-Webster. Capitalization is a noun, finance, the provision of capital for a company or the conversion of income or assets into capital. That's from the Oxford Dictionary. Capitalization, cap rates, are a commonly used metric to measure real estate investments. And since many people that look at infinite banking are real estate investors, you can look at it that way. The cap rate formula is used to show the potential rate of return on a real estate investment. The cap rate formula is the net operating income divided by the property value. Who's really in control of your money? Have you ever thought about that? Learning to control it is the most profitable thing you can do over a lifetime. Nelson Nash. Imagine, if you will, never having to depend on banks for money. No bank qualifying, no bank rules. Having access to capital for opportunities, things like business, investments, real estate, and giving more to your church, to your causes, to your legacy. It is well enough that people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning. Henry Ford. How do banks work? This cartoon's funny. Quick, give me the cash. In reality, that is what happens. As soon as you make a deposit, direct deposit, drive-through, the bank is in control of the money. Let's look at it from the bank's perspective. This is from the Federal Reserve Bank of Cleveland, straight from their website. Bank capitalization. Bank capital is a measure that appears on the liability side of the bank's balance sheet. One way to think about it is that capital is what is left over when you subtract other bank liabilities, such as deposits and loans made to the bank from bank assets. One regulatory measure of capital is Tier 1 capital. You may note that the bank deposit that you made is a liability for the bank. And from there, they must turn it into loans to create assets. Now, what is Tier 1 capital? Well, that, my friend, is the dirty little secret. You see, the FDIC recommends that banks own BOLI. BOLI is bank-owned life insurance. Banks actually own more life insurance than anyone. That was from the FDIC. This is from the Office of the Comptroller of the Currency. As you can see, bank-owned life insurance. So what banks own BOLI? Well, all of them. Bank of America, JP Morgan, Citibank, Regions, BancorpSouth, you name it, they all own bank-owned life insurance. Now this image is several years old, but it's a partial list from the Pirates of Manhattan. And as you can see, Bank of America owns over $13 billion worth of BOLI. Now today, that's probably over $20 billion of cash value life insurance. So banking is the most important business in the world. That's from Nelson Nash, author of Becoming Your Own Banker. Here I am picture with Nelson Nash at the Infinite Banking Think Tank in Birmingham, Alabama. Nelson was a personal mentor of mine, and he's dearly missed. If you're wondering, what is infinite banking? The infinite banking concept is an exercise in imagination, reason, logic, and prophecy. This concept and strategy are not get rich quick, pie in the sky, sales gimmicks, and it's definitely not for everyone. This process takes time, discipline, and commitment. So how does infinite banking work? Well, it works through premium deposits and loans into your own private banking system by giving you access to capital without penalty. And it allows you to use and spend your life insurance policy while you're alive. The velocity of money. Banks understand this. Banks like loaning money over and over again, turning their capital. EVA, economic value added, is a trademark term of Stern, Stewart and Company. EVA is used to measure the financial performance that attempts to capture the true economic profit of operating decisions. It's calculated by deducting the cost of capital from after-tax operating profits. Now, why is that important? Your capital has a cost. When considering your personal economy, the consumption cost of existing capital should be highly valued. Now let's compare banks to insurance companies. In the fact that they take deposits and make loans, they really operate pretty similarly. But traditional banks operate under the Federal Reserve System. That means they have fractional reserves, which creates financial tyranny and serfdom for the consumer. On the other hand, when you practice infinite banking, you can create your own private banking system that's backed with 100% reserves and create true financial freedom. It is the truth about money. So why life insurance? Life insurance is a financial tool. Pictured is a Swiss Army knife. That's the way life insurance works. It allows multiple uses of your money. You can have your dollars work harder. Multiple tasks from the same tool. Whole life insurance is the cornerstone of your financial plan. Without it, all else can fail. Life insurance is predictable and sound. Life insurance policies can be customized just for you. Life insurance provides multiple benefits not found in other financial products.
If you look here on the board, I've illustrated in the circle here, your private bank, your infinite banking system. Well, banks have to have deposits before they can make loans, traditional banks anyway. In this case, we're talking about your own private bank. So how do we get money into the system, into the private bank, the infinite banking system? Well, you have to pay premiums. The premiums go into the bank, and then you can make loans and repayments back into the very same system. Eventually, you'll build up cash flow that you can, or cash values in this case, that you can use for cash flow, income, or for any reason that you might have. So don't be afraid to capitalize. This is the second rule for IBC Infinite Banking.
Robert Kiyosaki, author of Rich Dad Poor Dad, said to control a car, the key is driver's education. With assets, the key is financial education. So keep learning and increase your financial education. Subscribe to our YouTube channel, Legacy Money, and I hope you enjoyed this video. Please leave a comment and let me know if I can help you in any way.